I remember working with a couple when I was a financial planner. They had lots of money, enough money to easily cover their bills. Let's talk about exactly how much money that is. Combined, they made well over $300,000 a year and had plenty of money in the bank. But they still, this is the kicker, they still had just absolutely horrible credit when I met them because they forget to pay their bills on time. And when they hired me, they said the reason they were hiring me to be their financial planner was because they needed discipline. Discipline was what they thought that they needed and that they lacked. Is it discipline that makes you better with money? Let's talk about it today. Hey there, Stackers. Welcome to the party that never ends called Money in the Morning. Welcome to the 3-room apartment above Uncle Jack's garage while the basement is being renovated. I'm Joe Saul-Sehy, Average Joe Money on Twitter. And today on Money in the Morning, 2 headlines ripped from the financial press. And not only like some shows are we going to read those pieces, we're also going to, and I know this is a mind better, we're actually going to talk about how dealing with these might help your wallet. Money in the Morning is brought to you today by Tiller. Head to stackingbenjamins.com/Tiller for more. With your finances updated in a spreadsheet, each day you can easily track spending, make a budget, run reports, collaborate, and much more. Tiller is so flexible and easy to use. You're going to want to try it out. They have a free trial period. Head to stackingbenjamins.com/Tiller for more. All right. Speaking of more, we got a lot more. We got 2 great headlines. So Laura, why don't you fire this puppy up for us?
Who needs coffee when you have Money in the Morning headlines?
I think about that every time she says it, and I think I still do need coffee. I mean, don't get me wrong. We got headlines, and that's exciting. But coffee and headlines, better than headlines and no coffee. Just my 2 cents there. Our first piece today comes to us from the Motley Fool. Motley Fool talking brand new stocks coming on the market. How about some pot stocks, dude? I had to put the dude in there. I couldn't hold back. But 2 hot marijuana stocks listing soon on U.S. exchanges. Are they buys? Should you meet your buddy in the corner and buy some of these hot marijuana stocks? They're coming to America, writes Keith Spates over at the Motley Fool. 2 marijuana stocks that are currently listed on Canadian stock exchanges soon plan also to list on U.S. stock exchanges. Aurora Cannabis, it's going to be ticker symbol ACBFF for now, as it's over the counter. Expects to trade on the New York Stock Exchange by the end of October. And Aleafia Health, ALEAF, should soon trade on the NASDAQ stock exchange. So far in 2018, Aurora's share price is up more than 30%. Aleafia stock has skyrocketed close to 350% year to date. Are these hot marijuana stocks that are coming soon to U.S. stock exchanges smart picks for you to buy now? Only 3 Canadian marijuana stocks are currently listed on major U.S. exchanges. Cronos Group became the first when its stock began trading on the NASDAQ on February 27th this year. Canopy Growth was the first Canadian marijuana. I just want to combine those. I don't, you've got Canadian, you got marijuana. We'll call it Caruana stock. The first Canadian marijuana stock on the NASDAQ, on the NYSE, with its listing in May of this year. Tilray joined Cronos on the NASDAQ in July. You might think an exposure to a big new pool of investors would have provided a big boost to each of these stocks, and you'd be partially right. Cronos jumped 18% following its NASDAQ listing. Tilray stock soared more than 30% on the first day of trading on the NASDAQ. Canopy, on the other hand, saw its shares drop after its listing on the NYSE. It's not that the NASDAQ has some kind of advantage for marijuana stocks that the NYSE does. The situations for each of these 3 Canadian marijuana growers were different. Cronos received an inordinate amount of attention as the very first Canadian marijuana stock to be listed on a major U.S. exchange. Unlike the others, Tilray conducted its IPO on the U.S. exchange rather than a Canadian exchange. As for Canopy, its stock has risen nearly 20% in the days following its announcement of plans to list on the NYSE. The situation for Aurora Cannabis and Aleafia Health will be unique as well. Aurora initially considered listing on a U.S. stock exchange earlier this year. However, the company became so busy gobbling up other marijuana businesses that it opted to delay its plans. In fiscal year 2018 alone, Aurora made 11 acquisitions and is in the process of completing another deal. It's possible that Aurora won't enjoy the big bounce that some of its peers did after listing on U.S. exchanges. For one thing, Aurora already claims a market cap of nearly $10 billion. Isn't that funny? $10 billion. Most people probably have never heard of it. The company also has received considerable publicity in the U.S. thanks to reports last month that Coca-Cola was interested in a partnership to develop cannabis-infused beverages. Aleafia, on the other hand, is still relatively small. Its market cap below $350 million. The company hasn't had nearly the same level of exposure to U.S. investors that Aurora, Canopy, Cronos, or Tilray have had. These factors could increase the likelihood that Aleafia's share price jumps after its NASDAQ listing. So the question, are they buys? Buying a stock just because it lists on a major U.S. exchange isn't a smart idea. Plenty of stocks that list on the NYSE and NASDAQ perform poorly. Sure, Aurora or Aleafia could experience boosts from the attention they receive from their new listings, but these increases will only be temporary if there aren't more compelling growth drivers for the stocks. The good news is that both Aurora and Aleafia definitely have solid opportunities for revenue growth. Canada's recreational marijuana market opens on October 17th, 2018. International medical marijuana markets could provide even greater potential over time. Actually, by the time this comes out in audio podcast form, you'll see recreational marijuana open in Canada. So what happens then? Right? And marijuana stocks, let's talk about this. They say that marijuana stock's not great to buy or buying any stock just because it lists on a U.S. exchange. Let's talk about these big numbers first. We heard that these companies, by and large, jumped a bunch when they got on a U.S. exchange. Realize that A, a lot of that happens on the first day, and B, a lot of it happens even when you can't, before you and I can buy it. Because of the fact that insiders get to trade first, you're going to see a lot of insiders making their moves and making a lot of money. It was usually when I'd have clients that would want to buy an IPO, an initial public offering, when a stock goes public, we'd put the order in, and by the time that my client got the order, a lot of the money to be made was gone. And orders just get put in order when they come in. So it's not like... the market was against anybody except those people on the inside that can trade very first. Those people that get to trade very first, they're the ones that are going to ching the cash register. So I'd say if you know somebody on the inside of these companies and can buy some shares before they go public, on that day, there's a great chance that you're going to make money. Doesn't mean you're going to. They had the case of the one stock drop 20% when it went public. The big thing about buying not just marijuana stocks, but any stocks is to work from a system of buying stocks. If you're somebody that's going to buy individual stocks, you have to be able to do at least fundamental analysis. And fundamental analysis, different than what a lot of people think. A lot of people think that, hey, if I like an idea, I think marijuana is going to be, more people are going to use it legally than in the past. I also think more states are going to make that easier to get, which means sales will be higher. It'll become more mainstream like cigarettes. If you think that's the case, it's still not a reason to buy a company. That's actually the starting point. In fact, a guy back in the early, in the 1990s and then early 2000s, Peter Lynch, ran a big fidelity fund called Magellan for a long time. And Peter Lynch was one of the gurus he's still a guru. But back in the day when he was much more public and running this fund, Peter Lynch would say things and people would respond. In fact, his book, Beat the Street, still a fantastic book. But Beat the Street is often misquoted. And I still hear people say, buy what you know, buy stocks that you know. And if you're going to buy individual stocks, buying what you know is job one. The problem is that's job one. And there's also job 2, 3, 4, 5, 6 before you actually buy. So looking first at a stock that you know, not one that you don't know anything about. And I'm not going to say, go sample the product, right? Oh, I need to go learn about marijuana stocks, honey. I'm going to be baked in the back room for the next 3 days. That might not be what I'm talking about. Get very familiar with the industry. Don't just buy it because you think that's where the hotness is. Once you get familiar with it, then do what's called fundamental analysis. And fundamental analysis is learning how the company does business, learning how they make money, how much money they make, how much debt they have, what their debt service ratio is, so to speak. There's a great measure called free cash flow. When you look at free cash flow, that's the money that the person gets to operate from. I mean, look at it this way. It's just like investing in somebody else. You and I have a credit score, and the reason we have a credit score is so banks can evaluate us, right? Same thing for you when you evaluate stocks. You want to be able to assign a credit score. And guess what that means? It means putting this system in place so that when a stock comes into the system, maybe one of these two, you can then run it through the system and decide if it meets your criteria. Good, a guy I feel very lucky to call a friend, Phil Town, has a wonderful system of how he picks stocks. And it took him a long time to get there. Started off with Warren Buffett, continued moving, tweaking his system, and now he has a system of purchasing stocks. Much better than reading that, hey, a couple of marijuana stocks are going public. So I think our takeaway from that one is buyer beware, but could be good. But I think you got to do the fundamental analysis first. And I say that there's a couple types of analysis because there's also another type called technical analysis. Technical analysis means it's the tea leaves. It's charts and graphs. You see these stock traders that follow these charts. They talk about breakouts and upside down teacups and all these crazy things. That's all voodoo. It works, but it works because people think it works. Because so many traders use it, it ends up being a self-fulfilling prophecy. So if you want to buy the right company, use fundamental analysis. If you want to buy it at what you think is going to be the right time, then technical analysis will help you with that. Fundamental analysis is way more important than technical analysis. If you're going to buy it and hold it, just make sure it's a company that's going to do what you want it to do. You're buying it for a reasonable price. Go buy it today. All right, that's our first headline. Let's say hello to everybody who's hanging out with us on Facebook. We do this live without a net in front of a Facebook audience. Makes me nervous as heck, and also at the same time, makes it a lot of fun because you never know how crazy the audience is going to get. Susan's here today. We got Susan. Kevin is here today. Hola, Kevin. Jacob's here, says, happy morning, afternoon, in the morning. We're recording this, by the way, in the afternoon here, Central Time. We started the morning. It's not just afternoon. By the way, people ask, so when do you record those? It depends. We do not have a set schedule. So come hang out with us, facebook.com/iStackBenjamins, and maybe you'll catch us at a random time. Kimberly says the sound's a little echo-ish. Well, guess what, Kimberly? We are halfway done now, and I didn't see your comment until now. So the Facebook group's going to get the echoey noise. I know exactly what's happening, and I apologize. What else do we got? Susan says we don't have the music or Laura, but we do have coffee. Yeah, they're not hearing any of this stuff. Lori's here on Echoey Day Live. Hey, Lori, we got Sean here. Jeff's here. Daryl's here. Says, where's my stock, dude? We've got Sean. Did I mention Sean? All right, let's move on to our second piece, which is a very, very short one today. This one comes to us from Philip Elmer DeWitt's Apple 3.0 blog, PED number 30.com. And he's been covering Apple since 1983, mostly for Time Magazine and for Fortune. And I often, because I work with a bunch of Apple products, read his blog. He says, is Apple service slipping? The stores are more crowded, the waits longer, the quality of the Genie uneven. From friend of the blog, Chris Comer. Speaking of Apple, I was at Apple Store Holyoke Mall to get a battery and phone replaced. Horrible experience, totally understaffed, like spending the afternoon at the DMV. Oh, that sounds like fun, doesn't it? Philip says, your mileage may vary. My experience, supported by the American Customer Service Index chart below, is that at its worst, Apple service is better than the rest. I sense some slippage, however. The stores are more crowded, the wait's longer, the quality of the G9 uneven. I had a bad Apple support call last month that a supervisor made right, more than right, but I don't know if I was somehow flagged for special treatment. And the chart says, when it comes to the American Customer Service Index, when it comes to personal computers and customer service, Apple with an 83%, Amazon is next with a 79. Actually, I take that back. Those are the 2017 numbers. 2018 numbers, Amazon's come up to 82, Samsung at 82, Asus at 78, HP at 78, Lenovo at 76, everybody else 76, Acer 75, Dell at 73. Toshiba is the company on the bottom at 71. So Apple's still the winner when it comes to customer service. Now, why am I bringing up customer service? We're talking about money, Joe. I want to talk about this two reasons. We were talking about individual stocks here a minute ago, and part of the issue when it comes to individual stocks is what those companies are built on. And Amazon has built a reputation as a different company. And when you take a look lately, customer service slipping, the numbers don't show it slipping, but it certainly shows other companies catching up. And as other companies catch up, you wonder that the margin of error for Apple gets smaller and smaller and smaller. So that's number one, looking at how the company's built. Apple partly built on customer service and differentiation, not as much as there used to be there. That's number one. But number two is in your own personal work life. When you build a reputation for X, you can't really rest on that reputation. You have to continually iterate on that and continue to move the ball higher and higher. Like, I'll tell you a little story. I walked in to get my hair cut, which I don't expect any frills when I get my hair cut, but somebody offered me coffee the first time I walked in there. I thought it was pretty cool. And then they said, well, actually, we have a latte machine. Latte. I get both of my hairs cut and I get a latte. That's incredible. If they'd never offered me the latte ever, things would have been fine. Because the next time I came in, I expected my damn latte. And guess what? Nobody offered it to me. That time, the next time, the time after. And then the next time they did offer me the latte. But then I thought that the customer service was shaky. If you build in a great customer service system, you have to continue to work that system. Pretty interesting. You know what? Kevin asks here, is Microsoft mentioned in the customer service index? I do not see it here, which is weird. Isn't that strange? I do not see that anywhere. Jeff asks, what's my opinion on Snap? You know what, Jeff? Number one, no idea. Number two, haven't looked at Snap. My personal gut feeling when you say Snap, and I think about stuff that I've read lately, I would be curious to see what the returning user numbers look like now that Facebook is really encroaching on that territory. I'm sure Facebook has had their problems lately, but when I look at Snap versus Instagram stories and Facebook stories, I'm wondering if where Snap goes from here. That's just my first wonder. And by the way, what I said during the first headline was start there with what you know, and then start putting the numbers together. You don't trade based on that gut feeling I had from the beginning. But that's the first thing I'd look at is how are those numbers holding up? Those are our two headlines. By the way, our takeaway from headline number 2 is to have this service mindset. And not just in your professional life, but just in life in general. And that'll make things a ton easier and also a ton more fun, by the way. Serving other people is a heck of a lot of fun. In just a second, we're going to take these two headlines. We're going to put them together into what we call the big idea. But before we do that, I have to talk about Tiller. And Tiller works with over 16,000 financial sources, including bank accounts, credit cards, brokerages, loans, and more. With your finances updated in a spreadsheet each day, you can easily track spending, make a budget, run reports, collaborate, and much more. All your accounts in one place. You don't have to manually download data or import CSV files. You can see your balances and transactions from all your accounts with one login. So it's more easy to manage your net worth, your balance sheet, assets, investments. It is the most customizable finance tool because it's built on the back of either Excel or Google Sheets you choose. And because of the fact that it connects with 16,000 banks and financial institutions every day, and you can decide how and where and when all that information gets to you, Tiller's the place. Whether you like it easy like I do, or you like charts and graphs, stackingbenjamins.com/Tiller for more. A lot of fun. Love, not just the Tiller product. I love it. Why is it always there's great people behind products you like? Like, I like Tiller, the product, but then you meet the Tiller people and you're like, well, of course they created great product. These are clearly people who care. And if you've heard on our Stacking Benjamins program, Peter Polson on the show, go back. He's been on twice. Go back and listen to Peter on the show. You'll get what I'm talking about. All right. Let's close out this baby by talking about the big idea. And today, I think the big idea is the way that we kicked it off. And that's that I work with these people that had $300,000 a year that they made between the two of them. They had plenty of cash in the bank. They had nice cash flow. They had horrible credit because of the fact that they thought that they needed better determination, that they needed to do a better job of putting their, the discipline they needed. They needed to sit down and get serious about it and all this. And I hear that a lot. Hey, you gotta get serious about your money. You gotta do 50 million things, regiment. Nah. It's funny because they said they lacked discipline, so they hired me. But what's funny is they were super disciplined in their life, right? I mean, the reason they made so much money was because of discipline. And I thought because of that, the discipline wasn't the issue at all. They were taking all this stuff where they were really disciplined. And because the way they put it, they weren't disciplined. They were wrecking everything with high interest rate debt, overdue fees, leased cars. The leases on their cars were horrible. And when they hired me, what did I do? Did I help them with discipline? Did exactly what we talked about today. We set up a system. We automated their bills. We created a new car pay cash fund. Made it easy for them to see their financial life in one place. At that time, we used Microsoft Money. That shows how long ago this was. But what was the key for them? It wasn't discipline at all. It was systems. If you think you need discipline, forget about it. Forget about it. How about that? I feel like a gangster. Instead, try systems. That's going to do for today, guys. Thanks for hanging out, everybody, on Facebook. Thanks for hanging out at home. Go Stack some Benjamins. I'm Joe Saul-Sehy. We'll see you next time back here at Money in the Morning.
Money in the Morning is created by Joe Saul-Sehy and comes to your ears because of the collective genius of our producer, Richie Rutter-Reese, engineer, Caden Thompson, and a pack of very well-trained ferrets here in the basement. You'll find links to all of our headlines featured on today's show in Joe's Twitter feed at @AverageJoeMoney. I know you already know this too, but Money in the Morning is for entertainment purposes only, and you shouldn't act on anything recommended by a bunch of entertainers in a basement without first consulting with your financial advisor and second, having your head examined. Have a headline you'd like us to discuss? Send them to Joe at stackingbenjamins.com or put them on our Stacking Benjamins Basement closed Facebook group. This show is copyright 2018 Stacking Benjamins LLC, all rights reserved. I'm Joe's mom's neighbor, Doug, and I reserve the right to always say, we'll see you next time back here on Money in the Morning.